Good weekend, peoples. It is your Saturday morning. I've already been out my Saturday early evening out to see the new Tom Cruise uh, movie. It was good. I liked it. I didn't see many of the others. Well, I did on Netflix or something later, but I didn't go to the movie theaters for them. But since it's a weekend here, there's no celebration in Asia of Memorial Day. So anyway, I'm wishing a good Memorial Day and a happy 3-day weekend to all of you good peoples. All right. So this video, it's ironic. I went back and pulled up some of the data I did on one, um, and I uploaded that one on May 27th, 2024. So I'm uploading this one on the 24th of May. And so that's what, 362 days ago. It seems like 2 years ago. So, anyway, what the thesis of this is how much MSTY do you need to retire? The math will shock you, right? The whole process really is kind of shocking on these high yields. So, I'm going to and when I put this video out, I was really excited last year because, I've been doing options for about 40 years. And I took a course. I say this sometimes in some of my videos that quote, I ramble on, but I'll get to it. So I flew up to Seattle. I took a 3-day course. It cost me about 3,500 for the course. And I had a hotel for 3 nights and meals and so forth in the airfare. So it was an expensive investment, but I really wanted to learn how to do options. And at that time, we didn't have the internet. When it, like I said, it was 40 years ago. There was no internet. There was no, so you literally did a classroom in a hotel, and there were probably 25 of us. We got a lot of one-on-one instruction, and you really learn by doing. And that's how anybody, I mean, I've taught 3 or 4 students in through my Discord where people said, I really want to learn it. What course do you recommend? And, you know, I mean, I wish you would teach it. And I said, well, I can do some Zoom sessions with you for, an hour long, very inexpensive, right? And I couldn't do this on a volume, but I did it on some one-offs, and I got 3 or 4 people, and they're doing well in that, and it really helps. All right, so the theme here, I'm not going to get sidetracked, is how much MSTY do you need to retire? Well, the one I did a year ago, essentially, I had MSTY and Coney was high flying as well. And in a way, it still is. It's just the chart of Coney hasn't kept up. Coinbase is not Bitcoin, right? And when you're talking about MSTY, um, you're talking about writing on top of MicroStrategy. Well, I can't think of a company that better represents Bitcoin than Michael Saylor, who happens to be the brilliant CEO, um, who was a graduate of MIT, a rocket scientist. I'm jumping around on my notes, but it's all stuff I know off the top of my head. So anyway, if you care, I tried to make this a hyperlink, but for some reason it didn't go. But I got actually, you can go look on my videos. Problem is I have 555 videos out there. You got to go back in time and to May 27th. So if that helps you find it too, it was something like, I don't know if the title was actually How to Retire on MSTY, but it was I'm retiring on 40,000 a month with under a $400,000 investment. And I showed that example. Now, in all honesty, did I need that to retire? Absolutely not. Did I own that much? Yes, I did. I probably had it for about 3 to 4 months. And then I started trimming when I saw the volatility, right? That something like that has. Well, the old saying is nothing comes for free. You don't get a lot of income unless you get volatility. So I'm going to teach you guys and give you some insights that even though I had 40 years experience with options in the marketplace, I was enamored with YieldMax, saying, wow, these guys are taking sophisticated tactics, okay, and they're applying them to retail investors. Before, you had to be a multimillionaire and you had to give up a lot of money to these guys in order for them to personally manage your account. As a matter of fact, Zega Financial, Jay, on many of the interviews, talked about what do they still do? They still manage money for people. They'll take some guy that owns, 2 million shares of Microsoft and say, well, do you want to diversify? Do you want us to write some covered calls? Do you want to get in bonds? Do you want to get in a different sector? I'm using extremes, but there are a lot of extremes out there. All right. So for that under 400K, I was producing 400,000 monthly using. Now, here's something else I tell people. I was only using 25% of my available wealth. I did not use margin. Have I ever used margin? I've always had a margin account, but I use it sparingly, very little bit. I mean, I retired in 2009 going into 2010 simply from the decade of making a lot, working for one of the top four tech titans in the decade of the 2000s. So I put in 11 years with a big tech firm and we were running, and I was in sales and business development, and we were making a lot of money. 2000 came along and whacked us, right? Like everybody. Oh, the dot coms, its eyeballs, money doesn't matter, blah, blah. And we all saw what happened. And I happened to be going through a divorce and I'd made all this money. I had options in the company. My options were, and all of a sudden, all that crashed. And I was like, I'm 50 and I want to retire in 5, 10 years. Where am I going? And then I got convinced later, after all of 2000 into 2001, how can I do that in the stock market? I've been playing the stock market for a long time, but I got to change my course. And I uncovered commodities in the super commodity cycle and began to understand that, and from soup to nuts. So what I'm telling you is I got excited about YieldMax because they were delivering fairly sophisticated option strategies. I don't know if you guys know this, but by definition, it used to be mutual funds. By definition, an ETF cannot have more. The reason you don't normally see single stock ETF. So I start an ETF and I only own Amazon, making it up, right? Can't do that because you got to deploy all the money that the people give you in order to be representative of owning Amazon. And that's not really safety. So the way around this is putting 75% of the capital. So you're in a MSTY, it's a single stock ETF, but it didn't break the rules. It passed the rules. How'd it do that? Because it put 75% in treasuries, interest earning 3, 4, 5, 6% interest, whatever the going rate on the various bonds and treasuries. Um, and that's how they accomplish that. Well, how can they own the underlying? They don't. Well, how can they write calls? They can't. So they use a process called synthetic options. What is a synthetic option? A synthetic option is when both of these methodologies are long stock. They buy a call. If you're bullish on a stock and you think it's going to go way up, just go buy. Why buy the stock? Because the stock costs you a lot more money than buying the option. But you better be right about the time. I've bought options and traded options for 40 years. I sell a lot more options than I buy options. You better damn be sure that it's going to move within the time frame. You can buy a leap and give yourself, you're paying more money, but you can give yourself a lot of runway. But the last thing you want to do is bet on something in a week unless you see something and know something. is going to happen, and you better be correct. But you're only going to lose the premium. It's not like you invested in a stock and it dropped in half and you got to wait years to get even. Okay. So what they do with these synthetics, they buy a call and then they sell a put. So those are both bullish bets. They just want to keep the premium. If I think the stock's $40 now and I think it's going to go to 50 or 55, I'm bullish, then I sell a 40 put. I just collect the premium. I don't have any liability. Of course I have liability, but I mean if it's truly bullish, that's just free money I earned. That helped offset the calls I had to buy, which are leveraged upside. Okay, I'm not gonna there's plenty of these videos that I have out that I go into detail on how YieldMax, but I'm gonna stop that and just get to the math here. So this isn't too long. So, but another tidbit for you guys, if you ever see this and you say, that's really interesting, I want to investigate, I want to look into it, make sure you're bullish, okay? What is MicroStrategy? Well, MicroStrategy is a business company that Michael Saylor, as the CEO, will tell you they could not compete against Microsoft. They had a small product and they were in the ecosphere where Microsoft was playing. Microsoft had hundreds of products and they could just never get high margins because Microsoft would, cut the knees out from under. They were having a really hard time. They were practically going under. And Michael and his executive management team at that time on MicroStrategy, right? Kind of like a Microsoft MicroStrategy. They subsequently now call themselves Strategy. Just FYI, if you didn't know. It's fairly recent. But people still refer to them. Their symbol's still MSTR. So, is that just strategy? All right. So what Michael did was started his treasury investing in Bitcoin. So if you're bullish on Bitcoin, then you should be bullish on MicroStrategy because they own over 550,000 Bitcoin. And they continue. He goes out on tours and talks to Michael Dell, talks to these massive CEOs and say, guys, from all our statistics, Bitcoin's going to average a 65% year over year increase. Now, it doesn't always work that way. Remember, it's an average. So you may have a year it goes down 40%. May have a year it goes up 150%. But that's pretty good that in its existence, it's averaged 65% a year. Ultimately, in another 5 or 10 years, that'll slow down. But in the meantime, if you're bullish, I don't own a single meme coin, altcoin. I'm not saying they're good. I just know so much about commodities and options and things. There's so much for me to do that I don't need to learn the altcoin universe. But I know a lot about BTC, and I do a lot of things around Coney and Misty and other things that leverage Bitcoin miners and Bitcoin. All right. So what got me out of holding thousands of shares of Misty and Coney? I think my share count was like 7,000, but literally I was earning 40,000 a month. Okay. So when I began to experience the at times severe NAV erosion, I sold 90% of Misty and Coney. And then I started playing around. I bought a little YBit, found out that that wasn't a very good methodology. You're better off in BITO or YBTC, although YBTC wasn't launched, or IBIT for that matter. So remember, in green here, the underlying almost assuredly, with a few minor exception, will always outperform the income fund, but it doesn't pay anything. Palantir is my favorite stock. I own a fair amount of PLTY right now, and I report on it daily on what it's done. Coney and PLTY, I will be adding Misty back. I used to report on about 5 or 6, and it just got to be a lot of work, and I spent my time investing, slowed down on my YouTube, and I'm back in the last month or two on the YouTube really going at it. And I'm doing a lot on miners, by the way. Bitcoin is digital gold to me. It's a store of wealth. It's safety, even though it's volatile as hell. And I feel the same way about gold and silver. Platinum's moving right now, the white metals. Silver's following it. I could go on and on. If you're interested at all in what I've been doing, I have my top miners of 2025, these 9 mining stocks to make you rich. I got a playlist. Somebody was asking me in there 2 or 3 weeks ago, and I went in and I stuck my last 8 videos on precious metals and mining. I stuck them in a playlist, and that's the name of probably the only playlist I have on the channel, and it's precious metals and mining stocks. So keeping on this, Misty has this underlying stock of MSTR. There's a lot of ETFs that are 2x bull, 2x bear, 1x bull, 1x bear. So there's other things out there. But if they even pay income, it's like a few cents. So there's no other comparisons except for 2 newer ones that I'm going to talk about below. But let me get you through the math. So this is Microstrategy owns over 550,000. A little typo. Okay, Bitcoin. All right, let's go down here, and I want you to follow my logic. Okay, here is Misty with YieldMax. Oftentimes I write it as YM because I write it so much and I don't want to spell that out. I'll say R Hill, like Round Hill, versus YM for YieldMax. Okay, so here's Misty's history. It launched in April of 20, it may have been late March, but its first payout was April of this. I had the date on here on the launch. I usually put it on there, but I don't have it right in front of me. It's not that important. They have made 14 payments, okay, in Misty. And here is the price at the time they declared their distribution. Okay, they always declare, most of the company, prior to market open. So YieldMax does on its monthlies, and most of them, they do it on Wednesday morning pre-market. So I always take the closing price on the Tuesday before. So that's what this price represents. And then here's the amount they say they're going to pay. And you have that day that they told you what the amount is to buy. The next day is ex-dividend, and the following day is payday. Now, if a weekend gets in there, then you have a weekend gap. Doesn't happen very often, but it does sometimes. Okay. So Misty opened, and on its first day, I think it closed at like 2057, 2087. I don't remember. My average price across all of those shares was like $21. This is early, right after the launch. So that's how I was able to do what I did. And from that point on, whoops. Oh, why is that price showing? Something's wrong with this, guys. Let me go fix this. Something happened. MST. I'm doing on my second screen. Yahoo. Okay. I hate it when there's something wrong in the information and I don't know what happened. All right. So I want to know what the price was. Because I'm moving up, right? These are the early, this is the first payment. And I'll get there in just a second. I don't need to pull it over and show you guys, but I'm on a second monitor pulling up history and all the prices. Now, if you want to see these and the dates they were paid and declared, just go out to YieldMaxETFs.com. You can Google it, get the link, and then they have their funds by types of funds. But the one there that, single stock or whatever they call it, there's like 30, 35, and then they have some groups. But Misty will be in there. And then you can see the same distribution. Some YouTubers will walk you through that. Yeah. That's why if I notice a mistake, the price was not, well, I don't think it was 42 that soon, but anything's possible. All right. So here's where they launched. They launched February 27th. So that was a launch date. So they did have some time there. And their closing on the very first day was 21.19. Usually they in the older days, last year and maybe just up till near the end of the year, all the YieldMax stocks were that came out at $20. Then they changed the rules, and I don't remember, that was October, November last year, and all the stocks that have been coming out are $50 stock. It's a great rule for them because if you want 100 shares so you can do an option or something, then you gotta buy more shares and higher, right? Even 10 shares at $50 a share is a $500 investment versus a $200 investment at 20. All right, so I'll leave these on here for a second, and let me just verify what this date was. The April payment was paid. Yeah, that is correct. So my bad. That's how much it zoomed, and this date was April the 3rd. And then technically it could even be 41.26, and then the declaration day that people had to buy then was 42.14 on April 3rd. Then the next day it dropped by the dividend on ex dividend day. For any of you that don't understand that, people, whenever all stocks fall, this isn't YieldMax, this isn't high yield or anything. It's just you wouldn't notice. If you own Pfizer and it pays 15 cents on a quarter or something, and it's $160, do you really notice if it's 159, 85? You wouldn't. But when a stock is 42.14 and pays you 4 in the pre-market, the minute it shows where it's going to be trading, it is minus the dividend, distribution dividend, whatever you want to call the income payment. Okay. That's just so some people argue my best prices I buy on ex dividend. The bad news about that is you wait the longest period, right? You're going to wait a month essentially before you're going to get paid. So I don't mind if I figure it's fairly priced relative to its chart and I like the trending situation. I do a lot of technical analysis as well. I will go buy that dividend stock on distribution. I mean, sorry, yeah, on declaration day. They do it pre-market. I watch it in the pre-market. I buy it sometimes. But of course, I add sometimes on ex-dividend. I just did that for PLTY. It paid $7, first time a YieldMax stock. But it was one of those stocks that came out at 50, ran to 94, pulled back into the 70s and 60s, and then it roared up to around 72. They declared a $7, so I was able to get it for like $62, $61 or something in the pre-market on ex-dividend day. So there's all kinds of strategies. All right, let me cover the math. Sorry, guys. I have a lot of knowledge. A lot of people find that when I ramble, it really helps because they learn a lot. Other people are like, "Will you just get to the point?" Guys, you can fast forward it if you want. But I find it helpful. I would want to know. I'm a knowledge-based person. I was an engineer, and then moved into marketing and sales. All right, in technology, of course. All right, so given this, right, let's take its history. This doesn't change, right? So I look at the price every time they're going to declare. Say they were $42 here, and they said we're going to pay $412.86. I know they do these long numbers, right? And then the next month, they came in, they dropped to 31.7. Well, let's take a look at the chart for a minute, guys. Oh, yeah, I had it right there all along. Do I have the right date? Yeah. Oh, 27 in one. Oh, I know what it is. No, it should be 22. That was a typo. Sometimes the funds, just FYI, you'll go read the website and they'll say we launched on, the 24th of February, but I actually go out and see the trades and a price reported. So I have tools I use for that, and I'll amend sometimes what they say, but in this case it was just a typo. I'm looking at that tool and it's 222. Okay. So the point is we have, and this is important that I'm telling you this because it's going to help with the math when I show you how much you need to spend if you want to retire and you're thinking about retiring. I'm not talking about somebody that's 20 or 30, although there are very wealthy people that do earn it, sold some companies, you're an Elon Musk or something, you're brilliant, or you inherit it or something and you just don't want to do traditional work. There's nothing wrong with investing. But where I'm going here, these are all the distribution. So just think about this, guys. If you came in, which I did, I got out though, out of most of it. I still retained some, but there were 4 or 5 months that I collected a lot of money. I just didn't need that level of money. So the 14 months average price, if I add all these prices together and divide by 14, I get 29.43. It's got 247 on it, right? But it rounds to 29.43. And by doing that, I did the same thing for the yields and I did the same thing for the distribution. So when I add all this together, right, I think, well, what I did do was I showed someone, if you bought it like I did at 21, low 21s, and held it, then in 1 year, and actually now it pays 13 times in a calendar year, not 12. That's important. Okay. Because they do the weekly guys, and some of these they have some weekly from YieldMax, not MSTY or Coney, some of them, but they have plenty of weeklies. They pay so that they pay 52 times a year. But when I calculate yield, I always use 13 in here. Now look at, and that's an annualized yield number. So if you want to know how to do that, I said, okay, take 412.86, multiply it by 13, and divide it by the price, and we call that yield on cost. Okay, I can still buy it at the open theoretically at that same price it closed at, and that's good enough. And now they told me how much they're going to pay me. May drop, and I get a better yield. It may go up a few pennies, but then I see what my yield. Look at these yields. So they've had 14 payments. 10 of them, 10 of the 14 have been over 100%, and 3 of the other 4, so 13 out of 14 are 96 and a half or above. They had a paltry, I mean, just a little tiny one, right? $1.37. Now you say, well, Bruce, they paid less here. Yeah, but look at the yield because the price. See, it's all you have a higher price. It takes a bigger number over here to get it. So their average yield is 114%. But I'll never forget buying Coney at $20, 20 high 20s, 21, adding a little bit more because that first day it closed at 21.19, the next day it closed at 21.60, but both of those days the low was 20.45 and 20.38 on the opening, right? Those first two, 22 and 23. And then on 26, the third day they went through a weekend, you still could have bought it at 20.95, 96, 97. 20.95 was the low. But my point being, I'll never forget about the time I was doing this of saying, I bought the stock at 20, call it. The stock's now at 40, and I've already collected almost $7. So you tell me I doubled my NAV price, Now, of course, I wrote it down because I wanted to keep collecting the income, right? I got to, but this stock is amazing. It's almost $10 after the first three payments. So after 12 payments, okay, now going forward, you would have 13 payments to be a year, right? And what'll happen is that when you have one single month where you have two payments, and it'll typically be like, okay, the distribution is May 2, and then it's May 30, something like that, right? And each of the funds has their unique month. That's how they get to 13. All right, guys. So what happens is I then took, now the stock is only at 21.52 now. By the way, there's a recent lawsuit saying that they mismanaged what they said and misdirected. And if you were a big loser in, Misty or Microstrategy, actually, in Microstrategy, then it's a, what do you call it, a common class where the big law firm comes out and files it and then tries to advertise to get people who lost money in MicroStrategy. Well, if you think this stock is volatile, right, and it is, look at this. This thing was $20. MicroStrategy launches, right, February 22. Look at, by the end of March, it's almost $45. And then it took it 5.5 months, and it intraday dipped below 20. I remember it not closing below 20. At least I don't think it did. Over here, there were several closes below 20. But with this, I think it's just one of those intraday deals, especially if that's all. No, that's November. Because August, we had a real brutal time in the stock market. I remember things open intraday, but that was more on stock indexes and so forth. But look at this. And what did it do after it bottomed? It went back again. Now, if you look at MicroStrategy, you will see that these were high points for MicroStrategy, but you have to understand these income funds cannot keep up with the massive moves of the underlying. They just simply can't do it. They'll pay you a terrific amount of income, and they need to be bullish ultimately. But that's why this stuff happens, because they have to earn back every time they make that payment. They open down 412, they open down 2.5 next month, they open down $3, right? And so forth and so forth. So when you look at this in this just 12-month cycle, they paid $33.20. So if you bought the stock at 20, now what happens, naive people come in here and they go on Misty to the moon, and all their friends are telling them about their big $4 payment and all this stuff. And the guy runs out and buys 500 shares at 42, okay? And then 4 months later, he's getting $1.85. It's still a great yield, but the stock's only 21.65. If you ever find yourself in DCA, direct cost average, do not put all your money in one single stroke of the pen, right? Don't hit buy and just throw all your money in there. Lag in, DCA in, direct cost average. So, guys, I know I'm going on, but really important stuff. Now I'm going to finish up with the math here. I need to explain this to you in detail. So, I wanted to say, how much money do you need to put in order to get that? You have to tell me what kind of monthly income. Do you still, or will you be collecting Social Security and you just want to supplement your money? Well, what if you just want 2,000? Then right now, today, I'm using the example. Oops, I did this wrong. I put a gap in here. I already had a gap between the two. The price is 21.52, but what I did was I came over here and I said, well, the average is 29.43. So it's a pretty good chance at 29.43 you're going to get 114% yield. And what does that equate to? The average distro out of all these, the average price is $29.43 when they declared. The average distro is $264. So I built it over here, even though you don't have to pay $29.43. You can go pay $21.52. That's what it closed at on Friday. But in all fairness to you, I wanted to run this math so you can see my logic. And then I went in and corrected it down to the current price and gave you then real share counts based on a 21.52 price. But remember, your price is always going to vary. But I'll show you the math I used to get this. All right. And I said, okay, 21.52 to 29.43, what's the ratio? Well, it's only 73%. So I said, okay, if it pays 264, what's 73% of 264? Well, it's 193. So these are all, now somebody's going to say, well, why did over here I pay 223, 233, and here I only have to pay 222 if you used all the ratio? Because guys, this math, this thing goes 29.4334, and that little bit causes this to be a few $100s. But basically, this one's 111477. This says you got to spend 111617. And the reality is only because of that. This one isn't. This one's, I typed in 2152 because that's the current price. This is a generated price. And then I shortened it in Excel. And even though it's shortened, it's still got the rest of the numbers in there. All right, guys. So it's raining outside. I don't know if you can hear that on my headset. I doubt it, but it's pretty loud out there. I hear it on the roof. And all right, I'm going to wrap this up for you guys. Sorry about that on the cough. So also, if you ever build your own spreadsheet, they have a great little goal seek. Sometimes I use Google Sheets. I love it for something. I love Excel for others. I'm in Excel here. So I just do a goal seek, right? I come out here in this column, and if you haven't ever used that, all you have to do is go to data, and I say, what if, right? And I say goal seek, and then I already have it, but I don't know how many shares it is without doing all the math, right? I just say, okay, this number, I want it to be 2,000. What if I wanted it all of a sudden to be 2,100? Watch. Okay, and by changing, because I tell this, take this price and multiply, or sorry, take this payment and multiply it by these shares to get my monthly income. But I want to change this cell. So it moved it to 1087. Okay, now I want to go back up here and I want to get rid of that. But it's a cool tool when you go to put it together. All right. So, guys, the thing here, hit me up in the comments and the questions if anybody wants some good income. But again, you need to be bullish. Do your own due diligence. I'm bullish. I watch and track this thing. I was reporting on it daily. Okay, I'll be doing that again on just how much income on a daily basis. And the strategy changed from naked calls that they sold. They called them covered calls, but they really weren't a traditional covered call because they didn't own the stock, but they owned the stock through buying a call and selling a put, which is synthetic. Then why not call it a synthetic call cover? So it drove me nuts. But needless to say, I understood it, and now they're using spreads. I'm not going to teach you here what the spread is. It's call spreads, got insurance, so they buy a call in case they blow past the one they sold, and it costs them a lot of their money and takes away profits in their synthetic, which always moves in the direction of the underlying. All right, so Guys, this is fantastic. If you need 2,000 a month, now, does that mean if you do this the first month, you might only get 1,800 because the distribution wasn't $1.93. Maybe it was $1.78, right? It didn't return to the mean, but the mean says you're going to get this, okay? So you needed $22,295 to generate annually 2,400. And technically you're going to get 13 months, so that's really 2,600, guys. So hopefully I'm enlightening you guys. Some of you will watch this. You already know Misty. You're already in it. And you'll say, oh, yeah, Bruce, I like that. Or did you think to tell them this? And I appreciate all that. But I hope to draw in some new people, guys. I'm doing this to add my subscribers. I'm working hard now on the channel. All right. So final thing to cover is there anything else out there doing anything? Well, as a matter of fact, there's a couple. The Evolution of Strategies by YieldMax for MSTY and other high yield ETFs. I'll talk about that in another. There's a new fund, okay? It launched in early April, I think the 3rd or the 4th. Actually, I'm going to punch it in on my other screen and tell you. It was early April. It was April the 3rd. Okay. Launch April 3, 2025. Ape! Ape! Ape is no good. Okay. So look at these distributions, guys. It's pretty impressive. But again, I'm sure they wanted it to be. Look at this yield. So they have 3. They have one on coin. Here's the symbol, ICOI. They have one on Mara, right? What is Mara? Bitcoin miner. I think they do some energy as well. But Bitcoin ecosphere, right? IMRA. Look at the distribution per share, guys. 701. That matches my Pulte. Now, go out and look at the price. The price when this was declared, the price was like $61. But still, it's 140% yield. It's still fabulous, right? I just got a 7.0442 on MS on Palantir is the underlying on PLTY, but it was like $71 at the time of, but so what? It still was 127%. I love Palantir. It's the only non-precious metals and miners and Bitcoin oriented company that I love. Absolutely think it's the best software company in the world. Think that it'll hit 3 or 4 trillion market cap. It's under $1 billion now or close to $1 billion. I think it's got Microsoft size in its future. I think it's going to continue to grow by a lot of metrics. It's overpriced, guys, but I just see them getting better and better and better. So anyway, guys, the reason that Microstrategy has dropped and all these guys have dropped, especially on Friday, early morning, that news came out and the law firm said we file class action. That was the word I was looking for. I'm sure you guys will hit me up in comments. Class action lawsuit. You couldn't, MicroStrategy has flown from, if I pulled up their chart, they've gone from 100 to 400. Let me pull it up on another, and I can bring it over for you guys. Because you talk about volatility and you talk about upside. I mean, there's no way that Misty's even held the upside. Look at this chart, guys. This is a 1-year chart. It's gone from below 150 down to 100 here to 550, back to 220, And then this down drop the other day was on that lawsuit. I really don't think there's much. You'd have to buy here and sell here to be a big loser. How else can you be a big loser and be in this company? Right. Now, maybe they announced or said something here. These law firms are like sharks. So anyway, guys, I'm not going to belabor that. I love Michael Saylor, love MicroStrategy, love Bitcoin. All right. Cool. And how do these guys do what they do? Well, they do it very similar. They do it with synthetic calls and puts. They don't own the stock, they don't own the underlying, and they also use spreads. So these guys are doing a very similar approach. Now, you want a different approach? Interesting. And by the way, YieldMax for most of its funds just filed an amendment so that they can do swaps and buy the underlying if they want to. What they like to have when you file on the SEC and you come out with an ETF, you have to be very specific about what it will own and what are your strategies and tactics. So if you say I'll write covered calls, they expect you to write covered calls. If you want to write synthetic covered calls, okay, then you better tell them you want synthetic covered calls. It's totally different. So anyway, they filed for this latest amendment. So I kind of think um, that Misty could change, but I don't think they'll do it if they see it going down or people aren't in it. And guys, I got something else to show you before I finish too that'll blow you away. Um, so this is what they do. Now, they launched here May 2nd. I think I actually wrote that. Yeah, launched on May 2nd. They're deploying swaps. They're called credit swaps. They're sold on over the counter, but it's a way of buying and selling those to equate to the value of the underlying. And they buy what's known as weekly credit swaps on MicroStrategy with the intent that they pay a premium. And then they sell those back and forth, right? And that's how they make their big money. That's how they gain leverage. So they're saying they will at all times be either as low as 150 and as high as 200% of MicroStrategy. Well, look at this. This moved down. So when MicroStrategy moves down, whatever it moved down, 3%, 4%, they're going to be 6%, 8%. So it's going to move. And then the income can make or break. Sometimes the volatility is good. But they paid, and they barely got going. They paid 0.335, but these guys pay weekly. So when I saw them declare, I bought 100 shares. Not much. Why not much? Because I like to see what they're going to be, but I'm thinking about reporting on it. And when I report on it, I want to know exactly what they're doing and how they've been doing it. And by owning it, it makes me more credible and I understand it closer because I pay attention to it more. I've got 80 stocks in my portfolio, just to give you, and the big bulk is like 30 miners of that kind of stuff. Income funds, I've got 6 or 8 or 10. So understand that this is going to be volatile. So if you see a bull run and you think BTC and MicroStrategy, which MicroStrategy closely resembles BTC, is just going to go crazy, you might want to be in MST. But other than that, right now, I'd rather be in Misty, and I own a lot more Misty than I do on MST. I need to buy some IMST and watch it. But I know its methodology because its methodology is exactly what YieldMax is doing on Misty at the moment. All right, guys, one more final thing. I did a separate video on YieldMax and all their assets under management and rank their funds. If you didn't see that video of mine, it's like 4 or 5, 6 videos ago. It was in the last 4 or 5 days. They have 49 ETFs. At that time, I imagine they're probably at 12 billion, but then 11.83 billion. So their average fund of the 49, when you divide this by 4, look how paltry that is. YieldMax ranks, and I also have this stats. In that same video, I showed where all of the rankings of the top companies, and I said, hey, here's ones I report on and pay particular attention to. And YieldMax was one of them. Sometimes they get referred to as title in those things because title is like the parent company. YieldMax was just a name that they came up with. I think the name is brilliant because, it's really a play on maximum yield. A lot of people hate on them, and I point this out in total return. Their NAV sucks on a lot of them, but I'll take 120% yield annualized and on something that drops 30 or 35%, and I still got a 75% return. I'll do that all day, but I won't do one that the NAV erosion is 90% and it pays 80. Drives me nuts. It just goes down, 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 down. Okay. So the other idea, guys, is when you own this thing and you're collect. Now, guys, I did not do drip in here. There's a lot of drip calculators out there that you can go out and find that are freebies. This is just assuming you need the income. And what I do with the income a lot of times is I buy other things. I move it into other things. I have enough money that I want in these funds and enough money to put more money if I need. But again, if you read what I put up there, I never have more than like 25, 30% in the stock market because I have physical gold and silver that's worth a lot more than what my accounts are worth. I sleep better at night doing that. And I've had it a long time. Can you imagine what the goal is worth now? All right. So we know this is volatile. We know these. So here's where I was going on this. Guys, look at this. If there and this was just 3 or 4 days ago, 5 days ago, this value. 11.83. I divided 384. It says 32.4 or 5% of all the money in YieldMax is in MSTY. It is so popular for a valid reason. Yeah, I said 32.5. And that's when I mentioned title, because sometimes if you find a listing of the top firms, you won't see YieldMax. Most of the time you will, but they'll say like title. I think it's TIDAL, guys, by the way. I just noticed that. Hmm. Yeah, there we go. Okay. And this is my favorite. This is my new favorite because I love the software company. It gives me a company to love. And MSTY, you know, strategy has dinky little income, but all that money that they have in the Bitcoins, they've just held them. And if you follow the 65% return and that does it over the next 5 years or 10 years, which it could well do, that's a hell of a lot of growth. All right, guys, I've been way, way too long on this. Sorry about just rambling, but hopefully you see some value in most of the rambles. But just speed it up if you don't. All right, guys, this is Bruce with Targeted Wealth Creation. This is how to retire on MSTY and how to go about it. Let me know. I'll even share that spreadsheet if you absolutely need it or want it. Not that difficult to recreate for you guys. All right, this is not financial advice, and I'm not a financial advisor. Please always check with a financial advisor before making any financial investments. Bye for now. Have a great 3-day weekend, peoples.